For all my business owners and all my investors, please write this down. The ultimate competitive advantage is to have an advantage and never reveal it to the world. When Kramer told her that she needs to stop being on media, and I love Kramer dearly. If it wasn't for Kramer, honestly, I would not be doing this because he gave the model for this at scale. Was there a pinch of maybe being upset with her? Maybe 2%. But the rest of it is true. It is very hard to be a rock star fund manager, rock star investor, and be a media darling. It's tough. There have been a few that have been able to do it. Buffett, Peter Lynch at one point. But most of the veteran investors are not media darlings. You can argue that the number one fund of all time, most of you don't even know who that is, and that is intentional. Some of the best investors do a great job of being in the shadows. So it's hard to be Diddy, dancing all in the video, and produce great results. So when you have an advantage, and I know sometimes we get so excited that we want to share everything with the world, but the same technology or strategy or idea that you have that can change the world, that will give you a competitive advantage, can be used against you if you give it away. So for all my entrepreneurs and investors, have an advantage, an edge that is yours, and then never reveal it to the world. I have to bring this up again. Mitigation of risk in every transaction is the quickest way to wealth. Everyone, please write this down or screenshot this. Mitigation of risk in every transaction is the quickest way to wealth. Quiz time. If you only risk 1.2% or 1.5% of your entire net worth on any deal, is it very difficult for you to lose all of your wealth and or go out of business? Here's the entire game. Have an incredible target, 50x, 10x, 100x, and risk 1.2 to 1.6 in every transaction. You don't need to win that many, especially if you're looking for 50 to 1 reward to risk. You only need 1 or 2 hits in a lifetime. If you get 10 hits in a lifetime, you are amazing. And this is something I want to bring up for entrepreneurs, because we've been having a lot of talks about wealth creation and generational wealth. And this is a point that is not brought up enough. Deal structure is the most important factor when creating wealth. So some of you may have not, because you were born in 1999 or 2003. But Steven Spielberg is one of the greatest directors of all time. So I need you to know deal structure will make or break your path to wealth. So for my entrepreneurs, you have to realize that he did not become rich from movies alone, but all of his movies back in the 80s and 90s turned into amusement park rides. So him and his lawyer, mainly his lawyer, conjured up an idea to receive a 2% royalty from all tickets sold at Universal and concessions. So this is very similar to the deal structure that Mayweather would do. He would get a percentage of everyone that comes in of all tickets and concessions. There are other artists that have done so in similar fashion, and of course Kevin O'Leary, which he should be on the show hopefully one day soon. His thing is to always get a royalty in perpetuity. Please write this down in chat. There is no wealth that is able to be created without leverage and or automation. And Steven Spielberg makes $50 million a year from this. And here's the catch on the back end. If anybody tries to screw him out of this deal and say, there's too much money that we're paying Steven for this horrible Jurassic Park ride, his buyout clause is $1 billion. So you amass wealth by how you structure your deals. And then you still want to take a part of this money and pour it back into the economic engine that is the market. So regardless of what your business is, you need to look to see how you can use scale, leverage, and royalties to then turn around and create wealth for you and your family. And for the same reason, I know some people hate that he does it, but Birdman makes about $20 to $25 million a year from royalties from his artists that are in his portfolio of music assets. The key lesson here, wealth is not created from hard work. It is created from how you structure your deals. Wealth is about a system. Because if that, like, truth be told, If wealth and accumulating riches was about hard work alone, every slave that ever walked the earth and every indentured servant would have a fortune to pass down to their family, correct? And they don't. So let me ask you, can I be honest about wealth creation? What if all the people that are trying to help you get super fast gains and super fast money are leading you to a trap on purpose? We asked this, I think, last year? If I propose to you, option A, you have 100% chance of making $100,000 and you have a 2% chance of making 2.5 million, but you're also going to ruins, which one are you going to take? The guaranteed money or the lower probability chance and you can lose everything? Last year was an easy market. I kept telling you guys, 21 is not going to be as easy. And after we have a super incredible year, the next year following normally slows down dramatically, to say the least. For those like in our farm traders, you've seen this too. Like if a Monday is super bullish, and let's say the market goes up 6% or 2%, 2.5%, 3%, the next day is usually slow, 0.5%, 1/4%, right? It's the same thing when you have these big economic booms. But some of the people are trying to lead you into a trap on purpose because they're telling you that you could get great gains. And I was telling this to the stock club last week. Like, I know there were a lot of people telling you last year, man, screw long-term investing. Don't nobody want to invest in no Apple or Microsoft and get 20% gain, 30% gain. Who cares? When you can get 14,000%, type in chat if any of you got 20,000 or 10,000% return last year. And because we did not grow up with money, we want to multiply. And also, like, some of this information has been hidden from us for so long. We want to gravitate to everything that is a little bit more flashy and sounds almost too good to be true to make up for lost time. But don't follow what I do, follow what the big companies do. I'm noticing a trend where people are putting more risk on the table to hit a big home run, and you're getting into a move way too late and then destroying all of the money that you do have. And then guess what? It breaks your confidence and you say that it does not work for you. So were some of these people trying to destroy your chance to secure wealth last year? Please put this in chat. Safe returns are better than giant gains that go away overnight. I even heard some of you, hey man, I'm talking to a guy, he said he can flip my money. He just gets 20% on the back end. He's gonna put into these like properties in Miami or where, and I'll get 800% return. I'm like, what real estate is allowing you to get 800% return? He only wants 20% on the back end. If it is too good to be true, it usually is.